Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, on Friday, the atmosphere of doubt and caution swept through the global markets, not only with the job report, but also the banking sector's health remained in the spotlight in the US as Silicon Valley Bank SVB Financial Group's share sales to shore up its balance sheet wiped out more than 80 billion in value of its bank shares. This has put very much some doubt in the industry as the SVB Financial, which runs Silicon Valley Bank, plummeted more than 60% last week as it tried to raise cash to relieve the crunch. Along with that, the American job market added a hefty 311,000 jobs in February, easily surpassing the 224 job gain forecasted, but still appears to be enough to keep the pressure on the US Federal Reserve to raise interest rates aggressively to fight inflation. Meanwhile, the unemployment rate rose by 3.6% last month from 3.4% in January, still the lowest since May 1969, while the average hourly earnings slowed to 0.2% after gaining 0.3% in January. But the dollar index nearly achieving its target last week of 106 after inking a high around the 105.80-90 area. The market has reversed and plummeted to the lows around 104.20 this morning, and now looks towards possibly a base of 103.20 due to the current events that's in play. Therefore, could see a rise in the Australian dollar as it looks towards the key level of 66.65.75, which was the point where the market broke down. Reassess from there, with the technical slightly in a positive territory, with the RSI breaking for the midway point, would help further gains. Looking at the euro, the market was a little bit hesitant in taking the challenge back to that lower side of 105.15, which coincided with the US dollar at 106. The market is now focused back on the region of 107.05.15. I feel the market may struggle there, but if we do see a clear break, would reinstate further gains up to 109. The dollar yen outlook, the market has gapped lower and now slightly in a negative bias due to the break of the RSI of the midway point of 50 and also the zero break of MACD, now marrying a bearish case. With the top side now on hold for the moment, I'm looking for a further slide towards 133.90 or down towards 133.30, and the base now seen around 132.20.40. I'm not dismissing the fact that the market can still gain its highs, but due to the current events that's in play, the bearishness coming back into the US dollar, with the situation of the SVB putting a bit of a strain on the markets, has also weighed heavily on the US dollar in terms of seeing a little bit of safe haven play come back into play. That is, when we look at the gold. First of all, looking at sterling, the market is rallied on now towards the top side target around 121.60.70 for this week, and with the break through the 119.70 area now puts a perfectly bullish case into play due to the midway point of the RSI and the MACD firming up. I'm a little bit skeptical about that topside challenge though, may find a little bit of difficulty, so I'm not going to get overly bullish. I think this is just a short squeeze as the market's been caught off guard. With the gap opening this morning, as the market rushes back into safe haven territory, we could see a further squeeze and unlikely to see any turnaround in the short play, but looking towards 1,890.96 as a target. With a cap seen around 1,910.14 area, and it was heavily contested there, and market found little momentum, is that once the assessment comes back into play on where the gold is, we may find supply returning or a bearish case emerging, and that would see a further plummet. I would like to make some note that the market swings are likely to be bigger than usual due to the current events that's in play. So therefore, if trading, still be on your guard in terms of how big the moves can actually come into play, and therefore could see very whipsaw price action towards this top side area. But nevertheless, I still feel the gap will be filled and then eventually see a pullback towards this bottom side, somewhere where we can look here that comes in around 1,868 to 69. That is where I see support, and nothing in between the current 20 or odd point gap that we can see here. So I still feel it's a little bit vulnerable in trading the gold market due to the current events that's in play. Wrapping up with oil, well, the market respected that bottom side level around 75.55 and is slightly in an upward march due to the weaker US dollar. Therefore, we could see a rise up towards that region of 78.20.25 and reassess. Well, that's a wrap for the morning, but please keep an eye out for the intraday report that will be released later today, and also the wrap-up